Good morning, everyone. Well, the dollar is opening mixed in Europe today. There's some profit taking the safe haven yen and Swiss franc, which were so strong yesterday. On the other hand, the Australian dollar and New Zealand dollar rallied strongly overnight. Both these moves are consistent with calm returning to the markets and a recovery in risk appetite. This was also evident in the rebound in U.S. stocks during the day, although ultimately they closed lower, and slightly higher U.S. Treasury yields. Now, some familiar themes are coming back into the market. The sterling recovered along with the high beta currencies. Its day of volatility last Friday following Bank of England Governor Carney's speech is fading fast, and the strong sterling theme is returning. Similarly, or the other way around, whichever way you want to look at it, the Canadian dollar was the biggest loser in the G10 overnight, even though Canadian Finance Minister Flaherty said there was no government push to drive the currency down. He said the market sets the rate. If so, the market appears to be setting the rate for the Canadian dollar lower. Today, the focus of attention will be on the late-night meeting of the Turkish Central Bank. The Turkish Central Bank said it will take the necessary policy measures for price stability at an extraordinary meeting this evening, and it is an extraordinary meeting, the meeting that's going to end at midnight. The speculation is that it could do anything from raising interest rates massively, 3 percentage points has been mentioned, to imposing capital controls. Together with the South African Reserve Bank meeting tomorrow, these two have the potential to stabilize the emerging markets crisis and maybe reverse some of the sharp movement we've seen in the FX market recently. Then again, they also have the potential to disappoint. The commodity currencies would be an obvious G10 beneficiary if they are successful in stabilizing things. Optimistic investors might also want to consider buying the Norwegian krone as well if they expect a rebound in EMN. The Nokia has been the currency most closely correlated with the Turkish lira and South African rand over the last year. The correlation between Turkish lira and the commodity currencies isn't much different than that with Turkish lira and the euro, which implies that a recovery in the lira today could help euro dollar as well. As for the indicators, there's a bunch coming out from Sweden. They have the PPI, retail sales and trade, all for December. Last month, the Swedish retail sales figure beat estimates, and the Swedish krona reacted strongly, rising about 120 pips. Thus, a slowdown today may be negative for the currency. In the UK, the nation's preliminary GDP for the fourth quarter is estimated to have accelerated on a year-on-year basis. The pound has been gaining on expectations of strong growth, and a number like this could be expected to maintain the momentum in the currency. From the U.S., we get durable goods orders for December. Both the headline figure and the figure excluding transportation equipment are forecast to rise, but at a slower pace than in November. The S&P Case-Shiller Home Price Index for November is forecast to have risen a bit faster than October. The Conference Board Consumer Confidence for January is forecast to fall slightly, while the Richmond Fed manufacturing activities is estimated to remain unchanged. Net-net, these U.S. figures as forecast probably wouldn't give any new direction to trading, so I think we'll be waiting to see any deviations from the forecast. And, of course, waiting for the Turkish Central Bank meeting. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Marshall Giller, head of Global FX Strategy at IronFX, wishing you solid trading.